This trade was taken because of just one single candle, and unfortunately many people make mistakes with it until now. Now keep watching the video with me so you can understand the whole secret. Peace be upon you and God's mercy and blessings. Welcome to Alex Pro Trading Channel, a channel dedicated to teaching trading for beginners online. In this video, God willing, we will explain a practical explanation of a real copy trading trade, and we will analyze it directly from the chart, step by step, without theories or complicated terms. Everything that will be said in this video is exactly visible in front of you in the image. First, the pair we entered the trade on is the NZD/USD on the 30-minute time frame. The first clear thing is that the market here was in a very strong bearish trend. The red candles were consecutive with clear bodies and no long wicks at all to indicate rejection or a real attempt to rise. This means that sellers were fully controlling the movement. After this consecutive drop, the price took a short pause, and this pause appeared in the form of a Doji candle. This Doji candle is the most important candle in the entire trade. Why? Because it appeared right before the entry and in the same direction of the trend. The Doji here means only one thing, so focus carefully. It means the market entered a very brief moment of hesitation after strong selling pressure, as you can see, but without any real attempt from buyers to reverse the trend. There was no long upper wick, no rejection candle, and no reversal signal. Just a temporary balance before the market continued its movement. And this is the point that separates a professional trader from someone trading randomly or a beginner. In simple terms, I don't enter the trade because of the Doji's color or its shape alone, but because the Doji appeared within a clearly bearish trend and after a strong move. This makes it a continuation candle, not a reversal. That's why, with the start of the very next candle, I entered a sell trade for 30 minutes, as shown clearly in the image. The entry was calculated in line with the market, without rushing or chasing the price. Choosing a 30-minute duration matched the time frame used, because the goal here was to benefit from trend continuation, not a random move or a fast trade without a foundation. This trade is a very clear example that success in trading is not about having many indicators, but about reading the chart and understanding the overall context. A clear trend. Selling pressure, a Doji in the right place, then a disciplined entry. This is exactly the method I followed when entering this trade you see on the screen. This is the same method we use daily in our copy trading trades, with calm analysis, clear risk management, and without any promises or exaggeration. If you would like to learn and see these trades in practice, you can follow us and see the daily explanations, where every step is explained before entry. In the end, I wish you all success, and I hope today's video and explanation were helpful. If you like the video and benefited from today's explanation, please like the video and subscribe to the channel if this is your first time watching me, and activate the notification bell on all so you always receive alerts for every new video. This was Alex from Alex Pro Trading. See you in the next video, God willing. Peace be upon you and God's mercy and blessings.